Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Minute for Monday, November 1st, 2021. We hope you had a great weekend and a nice Halloween. The markets are kicking off the month of November just like we finished up October with some strong gains. October 2021 being the best October that the markets have seen in 15 plus years. So that strong seasonality that we really preached about is really starting to take effect, and we expect to see that continue as we move into year end here. We don't think it'll be in a straight line, but we believe this market is headed higher. There's a couple reasons for that. Let me talk with you about a few of those things here. First, earnings. Earnings have been fantastic. Last week was really the big hurdle that we needed to get to, as you had a lot of the major tech companies reporting earnings last week, seeing that corporate profit growth that we wanted to see. A couple of companies reported some supply chain issues, which has really been expected for this earnings season. Supply chains have been the buzzword that we've seen and heard in a lot of these earnings calls. And we think over time that'll work itself out, but we're still seeing the type of corporate profit growth that we want to see. Looking ahead to this week, we have a very big Federal Reserve meeting on Wednesday, much anticipated, with potential policy announcements coming at the press conference after. Now, many market participants are expecting, kind of pricing in a probability here for the Fed to make some changes to their monthly bond buy program, which is very stimulative to the markets. But when you look at some of the data that we've had recently, if this Fed is truly being data dependent, it may not be a guarantee that they make any changes this week. Either way, we think the markets are well prepared for a change. If the Fed does make a change, we still think it'll be a very stimulative Fed. They're not slamming on the brakes by any means. But when you consider the GDP report we had at the end of last week, which showed growth slowing to a 2% annualized rate, when you look back at the September jobs report, which was reported in October, which saw the expectations missed by about 400,000 jobs, and then our retail sales data from September, which showed retail sales slowing a little bit. If this Fed is truly being data dependent, they may not make any changes at all this week at their meeting. So that'll be something to watch. It's likely to cause some volatility in the markets, but regardless of which way they go, we want to impress upon you that this Fed is still very stimulative and still very supportive of the markets. So any changes that come from that meeting is nothing that will concern us greatly. We still have more earnings reports to go, even though we got through a big kind of group of companies last week that represent a lot of market cap. There's still many companies to report. We are continuing to see positive reactions to the strong corporate profit growth, and we think that is very important. Another thing to note, when markets get to this point of the year, through the month of October, showing gains like they're showing now, let's call it greater than 15% gains through the end of October, there has never been a 2-month period to end the year that has shown negative returns, right? So 100% of the time, when markets have come in through the end of October up 15%, they have finished the year higher from that point, building on additional gains. So again, not a guarantee that that's the way we go this year, but we want to see that history is on our side, and we think this is a trend that ultimately bodes in our favor. So we will continue to watch this week how corporate earnings go. Federal Reserve meeting on Wednesday. It still appears that there's no progress right now in the Congress, in the House or Senate, on the proposed bill that's been debated on for quite some time. It appears to be getting smaller and smaller here by the day. The wealth tax has been removed entirely from the transcript, and it appears that maybe capital gains taxes and corporate taxes will not be included in this bill either. So I'm not sure what actually is going to be in the bill, but the smaller it gets, the more market-friendly it becomes. So that's something that bears watching in the days and weeks ahead. So if you have any questions, reach out to us. Always here to talk to you about the things that matter with your money. We'll be back later this week on Friday with the Heritage Market Pulse to wrap up all the action. Have a great day.